Fantastic. Well, Tony, thanks for joining us today. It's good to see you again. I hear you've got some potential news to share. You've potentially merged businesses with one of the great Melbourne commercial real estate agencies. Is that true?
Yeah, I just found out that myself, actually. No, of course not. Yeah, no, very exciting news for us with TT Global. As you may know, we started the company back in 1998.
Yes.
So after close to 25 years, I thought it's probably time to think about a succession plan. And obviously, a few years ago, that's when we first met.
Yes.
And at that time, I was thinking, oh, Paul Jones. So, but then not long after that, that's when COVID hit and nothing sort of happened too much. But then, after COVID, when sort of our business went back to usual, business as usual, if there's such a thing, that's when I started to think, okay, now it's time to do something. And obviously that's when we also met again, caught up.
Yes.
And I must say, Paul, I've been very, very impressed with you and also, what you have actually achieved in such a short time.
Well, we're having a bit of fun, but we're at the start, the marathon to come.
Yeah, so with the hopefully with the experience that we have accumulated, with the staff that we have on board, that's why when I was making that decision, to get together or not get together with Paul, in a way, it became quite easy after a while because I think that your organisation complements perfectly with our organisation.
Definitely.
So we're not we weren't doing really the same thing. We were doing something slightly different, although we specialise in commercial properties, but as we know, there's lots of different types of commercial properties. But, I think that us two getting together, it just makes so much sense.
Yeah, definitely.
Yeah.
So you started the TT Global business 25 years ago. Before that, you were working, rubbing shoulders with some of the great Melbourne agents, but you started your career in the 90s. What was it, 95, 94?
It was 93.
Okay.
Was when I first started.
Okay. And you would be considered the pioneer in selling, commercial investment sales to the Asian market. So when you first started in the industry, what are some deals you in the early phases where you got off to the offshore markets and made a big impact in the Melbourne CBD space? Yeah,
well, look, I can't claim all the credits of selling to all the Asian investors, but definitely at that time when I did sort of first got into commercial real estate, I was working for Jones Lang Wooten, back then it was called, JLW. And then I was working on the international desk.
Yes.
And round about that time was after one of the biggest property crash that we had in Australia. That was sort of in the late 80s and early 90s.
By crash, I mean, what were as a discount from peak to trough, what were they sort of selling at?
Oh, I don't know, maybe sort of 80% discount.
Really?
Yeah, because so prior to the crash was when interest rate was running at 19-20% per annum. People were just buying left, right, and centre because the theory is that you just put a deposit on something, then flick it on the next month, and then you still make 20 or 30%. And those deals were happening. It was crazy, and then the whole thing just came tumbling down. But that wasn't the time when I was in real estate. So I actually sort of got into commercial real estate after when it started to plateau out, as in when it bottomed out, was when I sort of first joined. And then sort of not long after that was when a lot of the Asian investors, particularly from Southeast Asia, started to sort of come into Australia because, the metrics and the fundamentals was just so compelling that, a lot of them just basically said, okay, well, this is too good a deal to not go for. And a lot of them ended up in buying here.
What are some examples of some properties, that people listening may be aware of and that you've sold once, twice or a few times? What are some of the transactions you've done to the Asian market?
Yeah, so when I was with JLW, some of the bigger deals that I was involved in, because obviously we worked as a team sort of back then, was 333 Collins Street. So that was sold to the Wing On Group. So that still sort of belongs to the Wing On today.
What did they pay?
Oh shit! At that time, I think it was around about 100 mil or thereabouts. And obviously, back then 100 mil was a lot of money.
Certainly.
Well, still is a lot of money sort of today. But then, having said that, I think, if I'm not mistaken, that was actually developed by the Beckton Group.
Okay.
And if I remember correctly, the Beckton Group, they spent about 300 million. That was their book value.
Okay.
So 100 mil was cheap.
Yeah.
And in hindsight, it was a fantastic deal. So you've got sort of deals like that. Then you've got deals to even the owner of the Walk Arcade, which is in Bourke Street Mall. So as you may or may not know, that's now currently being redeveloped into new retail space, and there's going to be 2 hotels at the Walk Arcade, Bourke Street Mall. So that was bought by a Singaporean, Tony Tai. He paid, I think it was about 18 mil.
Okay.
He bought that from AMP.
Wow.
And once again, sort of the book value at that time probably would have been about 60 or 70 mil for AMP. And then he picked it up for about sort of 18 or 19 mil. And just prior to the redevelopment, our estimated market value was around about 200 mil. So
crazy.
Yeah, so what they say is true. People do make a lot of money in property.
So what are the fundamental reasons why all of a sudden did Asian investors start buying in Melbourne? What were the major drawcard reasons that you found?
Yeah, I was going to say return on investment, but no, it's really stability.
Okay.
Because obviously, if they're really wanting to max out on the return, capital gains and all that, Australia's probably a little bit slow relative to the rest of the world. Because sometimes if you ride the right cycle in the right wave in some of the Asian countries, every year it'll go up by 100%. That's the norm sort of over there. But in Australia, look, it's very much steady as she goes. You buy something, blue chip properties, you know that you're going to get your return each year. And then in terms of capital appreciations, definitely over the long term, it also performs very consistently and performs very well. So it's more so the stability and I guess, be able to sleep at night.
Yeah, definitely. Are there any examples of assets which you sold to Asian investors, during this period that you've on-sold a couple of times?
Yeah, so some of the properties that, so let me think. So some of the properties would be the likes of Lonsdale Street, so 108 Lonsdale Street, yeah, that's it. So that used to be owned by it was occupied by the Civil Aviation Authority. Then we actually sold that property to a Taiwanese group called Friendly International. And then
what did they pay?
They, at that time, I think it was about 10 mil or thereabouts. Okay. That's this going back in the 80s. So they paid about 10 mil. So about sort of about after owning it for 10 years, for whatever reasons, the owner wanted to on-sell. So we then sort of started to seek a buyer, and then we had a group out from Malaysia that was interested in purchasing. So then we sold it to the Blackfoot Group.
Okay.
And I think they purchased it for about $30 million. So still a very handsome return for the Taiwanese.
Yes.
And still to today, we still manage the property on behalf of the Malaysian group who bought it.
Amazing.
So there's that 108 Lonsdale Street. Just on the opposite side of that, there's 123 Lonsdale Street, whereby we have also bought, managed, and then sold probably a couple of times as well. There's a few along Queen Street. So look, our bread and butter have always been some of the B-grade office buildings, around about 5,000 to 6,000 square metres in the CBD, where a lot of the buyers were privates from Southeast Asia, and they've done very well by it, and we have done very well by it.
Definitely. So stability is a big reason behind acquisitions in the 90s. Is that still the same to today? Have you seen any shifts in Asian capital seeking Melbourne CBD buildings or any Melbourne commercial property? Are the fundamentals still the same, or are you seeing trends and different reasons for buying?
Yeah, no, definitely things have changed. So when the Southeast Asians, and Southeast Asians, what I mean is with Singaporeans, Malaysians and so forth, or even people from Hong Kong. So that group at that time was probably was more chasing the stability factor. But then in recent times, obviously we had groups from mainland China, but I'm just trying to think whether there was another Asian group in between, but probably not. So I think, back in the early 20s, as in 2000s, early 2000s, that's when the mainland Chinese investors started to become quite active. Now, mainland Chinese is a complete different kettle of fish to the Southeast Asians. And a lot of those guys, not so much thereafter in stability, they had a few motivations. Some of it is definitely there for the killing. They want to just max out on capital returns and growth and so forth. A lot of it was actually more interested in getting money out from China to somehow to shift their funds sort of offshore. So they were, buying a lot of properties for those reasons.
And for those listening that, aren't aware of the reasons why they wanted to get money out, are you able to elaborate further on some of the reasons why people want to be getting money out of mainland China? Yeah,
well, look, that's pretty obvious because, China is still a control state. So, your money is not really your money. So, in terms of protection and long-term financial planning, it's only sort of, obvious that people would want to somehow, get part of their money out of their home country.
Are you aware of any transactions in the market that, people have just paid above and beyond what it takes just as a pure reason to get money out of China?
I am, but I probably can't say.
Plead the fifth?
Yeah.
Probably a good idea. Very good, very good.
Yep.
So, okay, so stability, getting money out of some Asian countries is definitely the way people are heading. Now, the last couple of years in investment, Asian capital has probably dried up a little bit in Australian commercial property. I was at an economic forum about a month ago, and they did state that Japan was investing quite heavily into Australian property, and they were the number one overseas group.
Yes.
You've obviously had a fair bit of exposure in the Malaysian, Singapore, and mainland China. Have you sold many properties to Japanese investors?
Not that many, but so getting back to when I first came into the market back in the early 90s, so just prior to then, during the late 80s, Japanese was also very dominant in Australia. And some of their larger investments were Melbourne Central. At that time, it was called Daimaru. So it was one of a handful of department stores which were controlled by Japanese, and they set up in Melbourne. So that whole Melbourne Central, and once again, at that time, it probably cost over $1 billion for them to develop and to set up. And during the big crash, that's when all property values went down. And in particular for the Japanese, they were actually hit pretty hard because not only did the property values went down, but the exchange rate also worked against them as well. So, and it got to a stage whereby, a lot of the Japanese firms, they have no choice but to repatriate their funds back into Japan. So they had to take a hit, sell whatever they can at whatever price, and then sort of do the exchange rate. And really, a lot of them were very disappointed with the end results. So getting back to Melbourne Central, so the end book value was about $1 million, and I think from memory it was sold for about $300 million, and I think at that time was to the Beeson family.
Yeah, okay, fantastic. Okay, so in the property cycle at the moment, there's a lot speculated. Interest rates are reasonably high in comparison to the 10-year average. What's your view on the current climate? Office buildings are somewhat difficult to lease. You've been involved in a lot of B-grade office building transactions and from management sale and then also leasing. Where do you think we are at the moment?
Yeah, look, definitely for office properties, COVID has definitely had a huge effect on office. Definitely, with working from home and all that, that still continue to cause some concerns for the office sector. Because look, it's pretty simple in that for employers, if most of your staff are still working from home, then you'll be asking yourself, well, do I really need such a big space or not? And if the answer is no, then then chances are they wouldn't be expanding their office or accommodations requirements. They'll be contracting. So, but having said that, and having spent many years in the market, definitely there are cycles. Just when you think there's no upside and whatever, it's just going to go down, then something will happen. I don't know what it is, but in history, it teaches us that something will happen, and then it causes the market to change. And then the cycle will start all over again. So I'm confident that this time is no different. Now, I think we are at the bottom of the cycle, or we are definitely very close to approaching the bottom of the cycle. So in a way, the only way is up. So if I was an investor, and which I am, part-time, of course. I would definitely sort of seriously think about sort of office, because that is the counter-cyclical play.
There you go. Well, you heard it here first. It's the time to buy office buildings through TTG and Jones Real Estate in the Melbourne CBD.
That's it.
Thanks a lot, Tony. Do appreciate you coming on board today, and I'll be seeing you later this afternoon in the office, no doubt.
Sure. Okay. Thanks.
No worries. Thanks, Tony.